like, have you heard about there are two types of what I would say carrying like calculating the value of any asset. So one is this financial accounting and the other is this tax based accounting. So what I mean to say is that in the financial accounting, if we take the case of India, all the rules, I mean to say all the rules, usually are framed for the Ind AS. In India, actually, it's Ind AS which is applied in India. So in Ind AS, ICA, the Institute of Chartered Accountants of India, has a major say into this. The other authority is National Financial Reporting Authority, that is NAFRA, we say. And the third is sometimes SEBI also in terms of capital market disclosure. So on those footings, on those basis, the financial accounts values and the reporting is calculated in India. Whereas in India, if we take the example, like how the tax-based accounting is done, so it's done on the basis of Income Tax Act which was implemented in the year 1961 in India. So this is how like the different basis of accounting is calculated for different audience to cater. Like this is for the entire stakeholders, like to you have to disclose in your AGM and like calculate EPS and all of those stuff. This is solely and solely for the tax authorities, like the income tax authorities in India, you can say. Now the basis of this chapter solely relies on one thing, that your financial numbers are way different than tax numbers, and it can be the reason that the tax authorities are disallowing some expenses or disallowing some incomes that you have recognized in your books of account. Let's say if you shouldn't be recognizing any income which was a non-recurring nature, but you have recognized it and it's giving a faulty picture to investors, like your net income is rising and in the end your EPS is also rising. So some like investors might be lured to invest in your company. That again might be a question of that SEBI, but for taxation authorities, they tax it that way. Anything like there are certain slabs for taxing you. Like if you go in like indirect taxes also, like or for direct taxes, the individual slab rate keeps on changing in India, like the new and old taxation regime. But their sole motive is that we will recognize and allow any income or expense it to be shown in the text based of books of accounts only and only when it is of a particular criteria that you have paid it out of your pocket. And if we are having any brief glimpse now that you are like showing like a faulty picture of your expenses, like you are increasing your expenses by too much while it shouldn't be, so we would be definitely disallowing those expenses. So there are multiple examples like when the taxation authorities usually differ from the financial accounting. So what happens, I'm just introducing some one terminology over here. So in asset side, I'm saying the asset side, let's say you have any property, plant and equipments in your asset side of your balance sheet. So you have, let's say, purchased any asset. So you have paid a purchase cost, let's say it's XXX. Okay. Now you will deduct the accumulated debt out of it. Okay. And then the value which you will be getting in your like ultimate outcome to be shown in your balance sheet would be known as carrying value. So carrying value is nothing but the purchase cost minus the accumulated depreciation equal to carrying value, and this accumulated depreciation is as per financial accounting or financial like standards, you can say any of the way. So financial standards here includes both US GAAP and IFRS. So they are not different reporting standards in this way, because see, your accounting side is one side and the other side, the right hand side, is your taxation side. So the accounting side includes both US GAAP and IFRS, and none like only US or only IFRS as the case may be. But in the case of this, what I would say, the taxation authorities, they would again recognize your purchase costs. They won't be like having any objection on this. But what they would say, yes, we would allow the depreciation, but the depreciation should be as per our terms. So they might say that if you have taken it, let's say SLM method, so we would be allowing you WDV method, that is written down value method, and then your ultimate value would be our tax base. they have used the word tax base. They mean to say the your purchase cost, I think that should be similar, because there is no like objection as per like the taxation authorities. But sometimes they have objection, like we won't be taking into account, let's say, freight or the cost incurred till that, what I would say, training your like what I would say, the labor force and so on and so forth. So these are the purchase cost or the capitalized nature of the expenses which we studied in that capitalization versus expense topic. So sometimes there might be what I would say, difference of opinions between the taxation authorities, but more or less the purchase cost is similar in both of them. But the major difference, I'm just giving example. There can be a number of differences between the accounting as well as taxation. So the best example is the depreciation. So depreciation, one would be taking SLM, one would be taking WDV, and the output, the closing value that they would be deriving out of it. In accounts, it's known as carrying value. In taxation, it's known as tax base. Okay. Tax base is nothing but the purchase cost minus the debt as per taxation authorities equal to tax base. Okay. See, guys, if you are comfortable, please start writing all of those wordings that I am using on my screen as of now. Because when you will be like doing the self reading of the topics at your home now, like after some days or even like during your revision days, so you again would like be confused, like what is tax base or what is carrying value. So that way, I'm just telling you ki if you have like pen and paper handy with you, or if you want to take a screenshot, it's your choice, but please keep these things handy with you. It's my humble request. Okay. Now, I have just now told you that there is a difference between the financial accounting and tax accounting. Financial accounting, I mean to say, that is CV. CV I will be like using for in this today's session for carrying value. I'm just writing it as of now, but you should be assuming it that this now like the CV would be this carrying value only, and here it is known as tax base. For this, I would be using the word TP. So what can be the difference between these two values, like CV and the tax base? For any asset, you can tell me. For any liability, you can tell me. I started by giving you example, like in our accounting standards, they are allowing depreciation as per SLM, but the taxation are allowing, let's say, WDV or the DDM method. So what are the other like difference of opinions between our like CV or the TB, you can say, or the financial accounting standards versus the tax accounting standards? So can you please help me, like what can be the difference of opinions between them, which would definitely lead to different values of CV and TB? Best is just I'm just giving a hint. Please like recall yesterday's class and the last Sunday's class. You would definitely have a hint out of it. Now once you can go ahead.
So carrying value won't be having any tax recovery on the price that we are computing after the depreciation reduction.
You mean to say carrying value won't be having any effect after tax, but calculating depreciation. I'm not able to understand your question. Sorry.
But I'm saying that uh, when we are computing carrying value,
Mm-hmm.
won't be having any recovery cost for tax on the amount that we are computing after deducting the depreciation.
Okay. I just want to tell you, like on this question, depreciation is known as a tax shield investment. It is said that a DTS, a depreciation पे you will enjoy tax shield. जितना भी आप डेप दे रहे हो, उस पे मोर और लेस आप जो भी टैक्स लगेगा, वो एक तरीके से आपके लिए टैक्स शील्ड है. सो योर क्वेश्चन इज दैट कि अगर अपना फाइनेंशियल अकाउंटिंग स्टैंडर्ड्स में जो सीवी निकल के आ रहा है उस पे डेप लगाया है, तो वेदर देयर वोंट बी एनी टैक्स इफेक्ट्स ऑन इट. सी अपन जब भी लाइक कैरिंग वैल्यू निकालते हैं, देर इज नो लाइक कैलकुलेशन ऑफ दिस टैक्सेशन बेनिफिट टिल द टाइम सीवी इज कैलकुलेटेड. बिकॉज ये बात किसकी हो रही है, सीवी इज अ पार्ट ऑफ दिस योर बैलेंस शीट. बैलेंस शीट में भी रिकॉर्ड ना कि लाइक एसेट की क्या परचेज कॉस्ट है लेस दिस डेप्रिसिएशन, और फिर बाद में लाइक देयर इज सीवी. सो दिस इज इन बैलेंस शीट, बट जब अपन इनकम स्टेटमेंट बनाते हैं, देर वी टेक डेप्रिसिएशन, देर वी टेक टैक्सेशन, ऑल ऑफ दो स्टेप्स फर्स्ट ऑफ ऑल। और यहाँ पे कोई सीवी की बात नहीं होती है, यहाँ पे अपन नेट इनकम निकलता है, तो इन नेट इनकम ऑलरेडी डेप्रिसिएशन का इफेक्ट आ जाता है, फर्स्ट थिंग। एंड डेप्रिसिएशन पे अगर स्पेसिफिकली अगर आप डेप्रिसिएशन की बात कर रहे हो, तो डेप्रिसिएशन दोनों में रिकॉग्नाइज हो रहा है। देर इज दैट ओनली द डिफरेंस कि कौन सा मेथड यूज कर रहे हैं। सो आप चाहे कोई भी डेप्रिसिएशन करो, बैलेंस शीट में उसकी वैल्यू पे कोई इफेक्ट नहीं आएगा टैक्सेशन का इफेक्ट सिर्फ इनकम स्टेटमेंट में आता है। गॉट माय पॉइंट?
Okay, sir.
Okay. Now please help me, like in which situations your financial accounts can be different from your taxation accounts? बहुत आसान है, कल की क्लास रिकॉल करो, मतलब लाइक कल मैंने क्या पढ़ाया था, वो टॉपिक के ही नाम ले लो। आई एम नॉट आस्किंग कि पूरा मुझे डिटेल में बताओ।
Pension was a topic.
सॉरी।
Rent.
Rent,
यार, yeah, the
lease.
lease one. And what
Yeah.
else, like apart from lease, I told you yesterday, the very next topic,
Pension.
after. Yep. So in pension there were two methods.
Yes, sir.
So what were their names? Just tell me the names. I'm not asking you to like deep dive. See, one was this, na, defined pension obligation and defined contribution.
Yes, sir.
Okay. So there can be a difference. I told you one thing, like अगर एक बंदा डिफाइंड कंट्रीब्यूशन पे चल रहा है वर्सेस डिफाइंड पेंशन पे चल रहा है, सो देयर माइट बी दैट, यहाँ पे सबसे पहली बात तो ये, द एम्प्लॉयर इज हैविंग दैट रिस्क ऑफ इन्वेस्टमेंट, सो his ultimate objective is to have his plan assets greater than those liabilities which I told you, PVDBO. So when these are greater, it's known as overfunded status. When it's lower, it's known as a underfunded status. Whereas in the contribution side, they don't have any such concept of plan asset and the PVDBO. Their ultimate objective is this much contribution, fixed amount I will be giving you each year. This is my like ultimate liability, whether that plan assets are sufficient or whether it's are not sufficient as per your like obligation. That is not my headache. My headache stands for employer's headache, not for employee I'm talking. So there can again be a difference, like a taxation might be allowing this defined pension plan method, but this sorry, defined benefit pension, I missed the word benefit. So one might be going by the defined benefit method, one might be going by the defined contribution method. What else? What else? Like recall our like last Sunday's class. What I like taught you in the last Sunday's class. What was the name of that reading? It was inventory, na? If you can recall, inventory reading. So there was some method of accounting, like I told you, there are like some approaches of calculating inventory value. What were they?
EPUB.
Yep, you're right. So one might be going by LIFO method, one might be going by FIFO method. Again, it might be giving you a difference of results. Okay. And there might be one more thing which was again taught on the very that Sunday's class only, that was starting with I. And I think it was briefly touched yesterday session also. Starting with I, what was the like uh, what I would tell you, the accountancy reading? What is the other word for depreciation and amortization, which is for infinite life? It is impairment now. Guys, please revise the class here. So one might be saying that the asset is impaired, one might not be saying. So it can be again a difference of opinions. Then other, the difference of opinion would be the useful life. So one might be saying that as per my value, the asset life is 5 years. It would be saying like, let's say asset life is 4 years. So this difference would lead to again the difference of depreciation amount, even if they are following the same method, SLM side, both side, the SLM is followed, the straight line method is followed, both the sides. But since the number of years, one side it's larger, one side it's bit small, so per year depreciation amount would be again a different, and this would again lead to difference values of CVs and tax bases. So this is how that the different values of CV and TB that are like generated with the course of time. Okay.